It's hard to breathe, but that's alright. Hush.
Hey, welcome back. So this one's a trade recap dedicated to pretty much looking at terms of entries. So yeah, I'm going to jump into it. So when it comes to looking at the high time frame point of interest, I was on a 4-hour time frame, and I've pretty much just seen this sort of range in which look quite choppy, but you can see it as a demand zone. It has partially been tapped into, but on the smaller time frames, there's an order block sat there that I can't go back that far, just because the data won't let me. But on a smaller time frame, there was an order block around the equilibrium, so that was still below, and as an imbalance above price, so that was a valid order block. But we're not focusing on that today. We're focusing on obviously what we're learning about in this section, so entry types. So if we were looking to take a trade off that, you could see here that this would have been just a nice simple trade. So if we just let price play out for a bit, right, and just let it go to its normal thing. Right, so currently right now that would have been a 6% trade just from open, taking a trade based off the open, and as you can see, it didn't fully pull back to the equilibrium anyways, but we had a nice reaction from the open. And what we're looking for now is if we just go down to the 1 hour time frame, you can see here that we're starting to see this range. Now I entered here, and I'll show you that in a minute on a 1 minute time frame, but we can see this range here, right, and within this range it looks pretty familiar with the last video, right, when we talked about the open versus the equilibrium. It looked pretty similar, but this is a Wyckoff phase. So this is Wyckoff phase, and like I said, you'll learn about that. And as you can see, again, it's just a liquidity sweep. So we had the equal lows, and as you can see, the liquidity sweep below. So it's a false move, inducing sellers. And as you can see, we closed back above into this range. Now, in order for me to look for long opportunities, I would prefer to see a break-off structure above this range, because obviously once we see a price break above the range, that can tell us that demand levels are going to most likely be respected. But if we were looking to break below, and we broke below this range, then obviously that would invalidate the whole looking for long opportunities, right? So a higher time frame point of interest, price tapped into it. If you took a trade off there, the max you're getting is 6% off a risk entry. So when it comes to taking a confirmation entry, all you're going to be looking at is obviously the higher time frame range. So if we just look at this, right, we're going to look at this here and see that there's also a triple top there. So a triple top, so a lot of liquidity resting above these highs. There's an imbalance in price here, which has actually been partially collected, but there's also an order block up here. And anything above that, if price continues higher and higher and higher, I'm going to continue to hold the trade. Okay. Now, if we just look at this, as you can see, if we go down to the 5 minute time frame, you can see this a bit more clearer. Right, price has got these equal highs, and which will obviously expect the manipulation because it's just money. As you can see, this here broken structure. Now on a 5 minute time frame, this here is a valid order block. So what you can do is just go ahead and draw the 5 minute order block. That's absolutely fine. Right, and you can take a trade off the open again. That's cool. Right, still 10% on where price is at currently now. But if we go down to the 1 minute time frame and just refine our order blocks, you can see here that on a 1 minute time frame, you get to refine it within this overall 5 minute order block. And we'll talk about refining order blocks. I'm not sure. At the time of recording this, I'm not sure whether you've already learned about it or not yet, as I have to rearrange some stuff. But this is overall 5 minute order block. It's partially been tapped into, so we went down to the 1 minute time frame, and this is the only last down candle before the up move, because we got this one here, but it's on the open. It's out the 5 minute order block. So again, everything else is invalid, and this was a nice trade opportunity to look to buy from. So this is the last point in demand in order for price to continue bearish and start respecting supply zones. But obviously we're respecting demand zones in this case. But at the time of sending this out, price was around 9.15 or something like that, so around here, right? And we're looking for that long buy to sell model. And at the point when price came back down to this low here, you're probably thinking, well, why didn't you take a trade off there? And the simple, again, if we could just go back to the 5 minute, you can see here that there's not an order block on there on the 5 minute, right? There's just this big candle here, but we refined it to the 1 minute. So when we go to the 1 minute, there's no other bearish candles. Okay, so what you can do is just go ahead and refine that to the next candle, because there isn't really any much momentum carried over in terms of the move, and there's imbalances along the way as well. There's quite fair in value, and there's imbalances here, so we're definitely expecting price to pull back into this zone anyways. But yeah, as you can see, I got a nice entry there. Because all we did was we found a higher time frame point of interest. We've seen a structure break above previous highs in which where the liquidity was, right? And then once price pulled back down into our 1 minute order block, we just took a risk entry off the 1 minute order block. Because all we're doing is, if you wanted to, this right now it is a 37% trade, right? And that's off the 1 minute time frame. So what originally would have happened, if we got to the 1 hour, if you would have had a risk entry off here, you wouldn't have been able to have this, 30 plus R trade. You would have only been having max 6%. So you can definitely tell confirmation entries are much better. So as you can see, price broken structure mitigated the 5 minute order block. Within that 5 minute order block, we took a risk entry on that 1 minute refined through the 5 minute order block, right? So we pretty much, when I say risk entry, all I did is I took them into the market execution as soon as price closed bullish or was in the open of order block. And it was a very nice simplistic trade, and that's what I do when it comes to confirmation entry, because all I'm looking for is a break of structure and the most recent candle. Now it doesn't matter what time frame you use. I went from the daily to the 4 hour to the 1 hour to the 15 minute to the 5 minute to the 1 minute. Alright, if I don't see anything on the 30 minute, that doesn't really look appealing to me. But pretty much on this 50, or even on the 1 hour, you've seen all these equal highs, so we knew that price was going to be manipulated to the upside anyways. But right now, what I'm looking to do is, if I just go back to the 1 hour actually and drag this out, right, what I'm looking to do is, I'm still in this trade, by the way. And the reason why I'm still in this trade is because there's no signs to get out just yet. As you can see, only price has just created a swing low. A lot of people would have closed out their positions there, and I understand that, because obviously you don't want to lose, right? But as time comes and a bit more experience, you understand that price hasn't really created any structural lows. So yes, there's imbalance here, don't get me wrong. I'm expecting price to, later on down the line, come down to these, and take out this liquidity and continue bearish. But right now, within this current momentum, I'm looking to hold the trade, right? My stops are, being pretty much trailed along the way. So below here, when price leaves this range, I can move it below to this low, and just play that trade aggressively. So what is currently just under 40% could turn into hundreds and hundreds of percentage, So it's just about monitoring the trades, and then once obviously the trade has started to break the structural swing lows. So for example, we have a new high here, right? Please go to the 15 minute, you see a bit more clearer, but we also have a new low here. Okay. So now that we're in a new range, we don't care about the previous highs and lows. We now only care about these highs and lows. Okay, so if price was to come back down and break below this low, I'd exit the position, or I'd be manually cashed out the trade anyway, because my stops are below there, right? But if we continue bullish and break above, again, we got a new low, potential new high wherever it stops, and reverses from, right? So again, it's just about monitoring it. Honestly, it's not as hard as people make it look. It's a lot easier than what people make it look for, that's for sure. But yeah, just understand everything, and that's pretty much why confirmation entry is better, because of the percentages. Okay. So yeah, thank you for watching, guys, and I'll catch you on the next video.